Hey guys, Crypto Sunday, and it's been rather a rough week on the crypto side for sure. Affected the stock side yesterday quite heavily. Yes, down about 30 grand. Yeah, maybe not quite as bad as it could have been. Obviously, I'm very heavy on Bitcoin, and Bitcoin hasn't dropped all that much. So, yeah, people sort of heavy in altcoins will have had a much worse week. But surprisingly, we've had some of the best news for a while. A few different bits, sort of mainly US focused. But yeah, we sort of maybe rather have it that way than the other way around. You don't want to be sort of rocketing up on hype alone with no sort of fundamental news, because that sort of fizzles out very quickly, and you sort of it then becomes a target that's almost impossible to meet for a long while. Where we get a drop like this, even though there's good news out there, you would think it'll be a temporary drop, and eventually that sort of fundamental flow will follow through. So, yeah, see this as a temporary knock, hopefully with better things to come. So looking at the CoinShares report, we knew this was going to be a little bit of a strange one. So 1.9 billion in inflows in total. It's obviously the week before last. This week's tomorrow's one is going to be a little bit unusual as well. But yes, we had a negative, total outflow for the week for Bitcoin, 175 million, and 1.6 billion almost inflow into Ethereum. So they have been going quite strong in there. 24 million out of the multi-asset, which is again a small amount of total assets, and then XRP and Solana. So these two have been sort of duking it out for a while, and Solana has sort of taken the majority of this week's gains, but they're both triple figures, and we haven't seen that all that often. I think this is by far the biggest Solana week ever, and possibly the biggest XRP week as well. 311 and 189. I thought that was pretty incredible. And I mean, Solana, that's over 10% of total assets under management in 1 week, and XRP sort of what is that, 8-9%. So yeah, pretty solid. 8 million into Sui as well, and then some sort of smaller numbers, outflows out of Litecoin, a little bit into Cardano, profit taking, I guess, on short Bitcoin. I presume that will have gone up now. And then 7 million into others, not too bad. And by country, it is a little bit all over the place. You sort of saw some inflows into Australia and Germany. 70 million into Germany, 75 into Switzerland, but some fairly big numbers elsewhere. I'm guessing this was partly on the Bitcoin side, 160 million out of Hong Kong. So they only have, I'm guessing this is 528 after that sale. So it was, I mean, 25% of assets under management in 1 week. That's rather heavy. The Canada is sort of 1.2%, so it's not nearly as heavy. Sweden with a little bit out as well. Brazil with quite a bit outflow, but 2 billion into the US. So the US more than the net total for the week of 1.9 billion. So this is the Ethereum ETFs largely. And then looking at the recent week, we have another net outflow week, largely due to Friday, sort of leading up to or the beginning of the week. We had 157 in, 80 million in, and 47 million in, sort of decreasing inflows, all due to BlackRock, sort of largely everywhere else was selling. ARK especially. ARK don't seem to be able to draw very much in at all. They've had consistent outflows for, well, nearly 3 weeks now. So, yeah, very unfortunate for them. Fidelity sort of not really faring much better. They had 100 million last week. So, yeah, it's been rough. And then the Friday, outflows from everywhere. Only 2 million from BlackRock. It does seem difficult to prize their Bitcoin from their hands, whoever's holding that. But 330 from Fidelity out and 327 from ARK. So pretty big numbers for them. And outflow out of the old and new Grayscale. So yeah, 812 million. I think that's one of the biggest outflow weeks we've had. Obviously, Friday was a little bit rough with the jobs news and, stocks down. So no real surprise at that, but there you go. On the Ethereum side, despite a similarly rough day on the Friday, although BlackRock was net zero on Ethereum, you saw outflows out of Bitwise and the old and new Grayscale, 450 mil outflow, but inflows all 4 earlier days, including the Tuesday, 223 million into the BlackRock fund. So yeah, net inflow, not a huge amount, but a net inflow into Ethereum. And the Solana one, I guess, is relatively new, but it's good to see that they saw no outflows at all for the week. 5, 9 million, 2 million on the Thursday, and then a net zero flat on Friday. So people are sort of looking at that a little bit long term, I guess, not even selling on the rough Friday. Looking at the treasury companies, lovely picture of cowboy Michael Saylor, of course. He loves posting all of these. We didn't get the announcement Monday. I kind of thought that was going to be a flat week for them. But then Tuesday, sort of first time in a long while that they've done the announcement on Tuesday. They acquired 21,000 Bitcoin. So this was off the back of their stretch, I believe, STRC launching. It was 2.5 billion, and they bought 2.46 billion of Bitcoin at 117,000. So down from that since. And this does push their average up quite a lot. It wasn't so long ago we said they'd hit 70, and they've now hit $73,277 average. So that's quite a lot, pushing their average further up at risk potentially in the next bear market. So yeah, obviously all of the other companies are at much greater risk because their average is considerably higher. Smarter Web Company, be one of those companies with a much higher average. They bought 225 again, hold 2,050. The smaller one, H100, acquired 56.9. Saylor was retweeting all sorts of stuff. They had their earnings as well. A lot of people sort of saying, how do you get $32.90 or whatever it was earnings per share for a $400 stock? It was like the biggest quarterly earnings ever, but it is fake earnings. It was quite funny. The analysts were looking at adjusted earnings basically, so the estimate was like -3 cents and they reported $32, and everyone said, why isn't the price going up? And it's like, we know, this is up to June the 30th. We knew what the price was at June the 30th, and we knew what their net profit would be essentially for the last sort of month and a bit. So it's not a surprise when it comes out. It's just they weren't reporting, the analysts weren't reporting the gain in Bitcoin. And yeah, they announced another 4.2 billion at the market program for this STRC one, not a sort of pre-funded one, but yeah, have to see if people are interested in that. Looks like this is some sort of variable dividend one. They're sort of trying to, I saw somebody call it creating a yield curve on these sort of dividend paying stocks that he's creating. So not just MicroStrategy, basically a sort of preferred shares, short-term, medium-term and long-term strategy for it. So interesting. Although, every time they do this, like the 2.5 billion that they've done this time, the buying pressure from that is now over, and there's now essentially sell pressure on it going forward indefinitely. they've got to pay 10% or whatever it is every year. They're never going to buy more Bitcoin with that money. It's all bought. So it does create sort of sell pressure. You've got 250 million a year just from that sale to be paid out. So there's a lot of talk of them sort of selling, issuing new MicroStrategy shares to pay for the dividend. So that sort of wouldn't be taken too well, I think, by shareholders. It's share dilution and buying no Bitcoin with the money. It's just paying it out to shareholders. So, yeah, interesting one. So, US SEC news. We'd sort of kind of been thinking that they've been rather quiet sort of last month or two. They've been sort of delaying all of the ETF approvals that have been coming due, and yeah, sort of kind of wondering what they were up to. But looks like they've been doing a flurry of stuff that we didn't really know they were looking at. So BlackRock had applied for their IBIT ETF options limit to be increased from 25,000 contracts per entity, if you like, owning them, to 250,000. People sort of wanting to hedge and put sort of various strategies in. We're saying that that's not enough contracts. Basically, they want bigger size, and they could get more capital in if they were allowed to hedge and do various things with the options. And the SEC have finally agreed. The ETF is sort of the fastest growing ETF ever, and is one of the largest ETFs in the world now. Obviously not up there with your S&P 500 ETFs, but it's pretty big, and apparently had no reason really to have this small limit. So yeah, you had Eric Balchunas, the Bloomberg ETF guy, basically saying this could spur a flurry of sort of more structured products and things that we saw a brief look at before, where you can sort of only have like 10% of the downside of Bitcoin, but you only get 30-40% of the upside through these sort of options. But if you want sort of billions of dollars to go into those ETFs and structured products and things, you need a lot of derivatives. So yeah, they've approved this. And another sort of decision more on the plumbing, I suppose, of ETFs. They've approved in-kind creations and redemptions for crypto ETPs. So not just for BlackRock, it looks like it's for everyone. They're now allowed to, so somebody can, if they have Bitcoin and they're wanting to sort of own the ETF instead, before they would have had to sell their Bitcoin on an exchange, for example, and then buy the buy the ETF, and then the ETF goes and buys Bitcoin from someone else, and it's just a sort of friction, a very heavy friction operation basically, and involves lots of tax for the person selling and all sorts really. Where now the person can send their Bitcoin to BlackRock and receive, as I understand it, they can send their, if they're big holders, of course, and sort of more institutional people, I guess. You can't send one Bitcoin to BlackRock and sort of get shares of it, but yeah, you can. Larger people can exchange Bitcoin for shares and pay no tax on it. They'll just then hold the ETF because it's deemed the same thing. And same on the way out, people wanting to take custody of their own Bitcoin. There's potential that may be a little bit more difficult than it first sounds, but I think that's the idea, that you would just receive Bitcoin instead of selling the shares and then buying Bitcoin and tax and fees on top of all of that. Just sort of smooths out the process basically. So this is just seen as another sort of modernising, making the product more mature basically, and bigger money sort of coming in. Doesn't want to be having sort of huge tax bills and fees and sort of slippage basically. You're not getting the actual return of Bitcoin when you keep sort of having these fees all the time, buying and selling fees and tax and that sort of thing. So yeah, that was pretty strong. In here as well, that noted that the SEC have approved flex options, flexible. So this is sort of flexible strikes and that sort of thing, rather than just sort of a fixed call option. For example, you can have it sort of pay out at certain levels, sort of almost like spread betting, really, if you've looked into spread betting before. So yeah, that was, again, creates all manner of possibilities for ETFs, and yeah, very interesting. A lot of people would call this sort of paper Bitcoin, and increasing the 21 million basically, with obviously unlimited amount of derivatives essentially being able to be created, but I think this was kind of inevitable. And then last but not least, we got the SEC's Project Crypto. This was sort of a very large, from looks of it, 140-page report that the SEC were issuing, kind of a sort of market structure type thing. Obviously, the market structure legislation is going through the Senate at the moment, but this is sort of the SEC's plan, basically, of what they want to see. And there's sort of talks of regulatory easing, so DeFi hopefully should have an easier time. Sort of a lot of thoughts that DeFi kind of would be going away with more, more SEC rules and laws and things, making it easier for traditional finance to do it. People might see less of a reason to use DeFi protocols, but yeah, if they're sort of deregulating it, there'll always be people, in the US that don't want to use traditional finance, I guess. The biggest thing I took from this was this sort of continued talk of moving the capital markets on chain. So that's sort of it's always been Solana's goal, essentially. They've always talked about NASDAQ on chain. We're starting to get tokenized stocks from Robinhood and people like that, but those are sort of a bridge, not the best implementation. They're sort of tokenized stocks on the side of and sort of representing the actual stock, where obviously what people want is the initial stock to be actually issued on chain. The only way to have it is on chain, and that would sort of lead. This is what Larry Fink has always said. That would lead to better sort of ownership. But you wouldn't have BlackRock making large decisions on voting on things from the company, because they hold 10% of the stock. Same with Vanguard, although they haven't mentioned it. Larry Fink says he doesn't want to be making decisions on, thousands of different companies just because they own 10% of the stock. You could have people voting even with small amounts of shares because they own the stock. And there's lots of other stuff in the report, sort of talk of super apps, trying to make it easier to build something like this. China have their WeChat app from Tencent, sort of everything all built into one app. Payments, social media, ordering a taxi, everything you can do from all within one app. This is sort of what I think Elon Musk is trying to do with X, or Twitter, refuse to call it X. But yeah, sort of trying to integrate payments and sort of having a social network and everything all in that. So a little bit unusual to be including in this report, but they're sort of seeing it as potentially coming from the crypto side. You have sort of mini apps and things potentially on something like Base being developed on chain. Could be the next Charles Schwab or a next generation Morgan Stanley. This was very odd as well, sort of name dropping an ERC protocol, which I gather is from Ethereum, sort of potentially indicating that they're expecting real world assets and permission tokens and things, tokenized stocks, to be on Ethereum, which is maybe a little bit early to be making that call. or sort of saying that's what they would prefer. I think ERC, that would indicate this is an Ethereum protocol, but it's obviously the largest. But yeah, to be sort of actually pushing this and sort of name dropping protocols, I thought was quite interesting. So I think the conclusion, I would more put it as, we want to do a lot of stuff and allow a lot of stuff, but this isn't actually sort of legislation or anything happening. It's just signalling the intent, basically, from the SEC, which I think they're just trying to get as far away as they can from the Gary Gensler model and sort of show that they're open, basically. They sort of mention about entrepreneurs coming back to the US, and what better way for that than the SEC basically saying, come here, not you can do whatever you want, but we'll be, open to discuss what you're doing at least. That was sort of part of the reason a lot of people were leaving and going to other countries. So, yeah, interesting, and clearly what they've been spending rather a lot of their time on. So we'll have to see what comes now. So thinking about the Bitcoin miners, of course, obviously taken a fair whack in the last week with Bitcoin dropping, and but what sort of I'm partly more interested in was hash rate, of course, and we sort of saw a little bit of a drop earlier on in the week, got back down to even in the 600s, the high 600s, but yeah, we had another spike up to 1.06 zeta hash, and is now sort of sitting around just around 1 zeta hash. So that's rather high. I was kind of hoping we might be getting a lowering in the difficulty. I think that's next Friday from the looks of it, considering we're at sort of highs again, 127 on the difficulty. And yeah, it looks like it's still slated for a small drop, 2.12% at the moment, but if we keep sort of getting these spikes over 1 zeta hash, then this could potentially come down and even be an increase by next Saturday. So we'll have to see, but yeah, not looking super ideal for the miners. Kind of would hope some people were maybe taking hash rate off, taking some of the old unprofitable hash rate off to, push towards AI potentially. But we'll have to see. Looking at the global liquidity chart, does have the whiff of starting to be wrong potentially. It's we're sort of at this point in the 12-week delayed global M2 where it really is rocketing up, and this is right at the point where we got our fairly significant drop on Friday. Obviously, it has diverged reasonably far from the global liquidity before, sort of both on the downside over here and on the, you could call this the upside. This was probably just more delayed coming down, really. Kind of made a double top and then came down at the start of the year. But yeah, certainly is at a reasonably diverged point from this now, and if it is sort of to keep pace, you've sort of topped out here at a sort of Bitcoin implied price of like 185,000, and yeah, that is in sort of 7 weeks. So to get to 185 in 7 weeks does sound an extremely tall order. Would think essentially need to be rocketing up basically from now, probably from this coming week onwards. So we'll have to see. Potentially the chart could break down. Has no reason to to correlate 1-to-1. It could certainly break down if you go back sort of before before January 24, which is when I sort of focus on it because of the start of the ETFs. It was much less correlated before then. I just kind of thought with the start of the ETFs, maybe that is why it had become a much tighter correlation, but could be coincidence. So looking at coins for the week, obviously it's fairly down. I wouldn't call it an absolute bloodbath. We've seen worse, but yeah, certainly red. Bitcoin, though, 2.3% down, and that's why portfolio hasn't been quite as hard hit as some may have. Solana down 12.5%. Ethereum down 7%. Chainlink down 13%. Helium down 16.5%. That is underperformer for the week. Gito 14.5%. Radium 16%. And then Metaplex 1.5% down. And Honey 5.3%. So yeah, Metaplex only 1.5% down. Could call that outperformer for the week, even though it's in the red. But there you go. Interesting times. As I say, sort of a down week on some extremely positive news. I would kind of take that and sort of think the fundamentals will follow through in the end. So leave your thoughts in the comments below and like and subscribe. See you soon.